Cool, thanks for having me. So I'm Ian, I founded MyBit about 2 years ago. And then a little bit about my background, I guess, is I got involved with Bitcoin in about 7 years ago, in 2012. Was like mining it, trading it, and then ended up partnering with Bitman and Avalon and being a distributor in the US. So I was just a kid in college getting a bunch of miners like shipped to my dorm room and like mining out of extra bedrooms. And then like reselling those in like the hundreds. And shortly after that, you know, I got really big into like the underlying technology of Bitcoin, blockchain, and saw the potential with that. So I dropped out of college and founded a few different companies over like the next 4 years. All but one, which failed. And you know, my first company I started built the first ever accounting software and like tax compliance stuff for Bitcoin back in 2013 or 2014. And we went bankrupt very quick because nobody back then was paying taxes on Bitcoin or anything. And then after that, kind of got into like virtual reality and stuff like that, and did okay with that. Okay, so after the whole accounting and VR company thing, I started a company called Encrypted Labs in the US that was doing like consulting and trying to like educate corporations and stuff on blockchain. And at the time, we were the first partners for BigChain, which is now the people behind Ocean Protocol. And we partnered with like Trent and Bruce from there to distribute it throughout the US. And did that for about 2 years. You know, didn't have the best results with it because it was still really early on in the adoption cycle. And my passion the whole time had really been alternative investments, and it's how I initially got into Bitcoin. So I kind of came up with the idea for MyBit when I was really looking for, you know, what's the next big thing. It was before the ICO hype and all of that. And I really saw the machine economy as being that next huge opportunity, where you have just all of these robots coming, automating jobs that really don't require any maintenance and are producing like really big profits. So I looked, how can I invest in that? And it was really only through like hedge funds or private equity funds or something like that. And the whole model behind that made no sense to me. I got into Bitcoin because I loved the aspect of being able to hold my money, having control of that, and not relying on somebody else. So to invest and have to give my money to somebody else to do it on my behalf and manage it, it just didn't really make sense. And smart contracts on Ethereum were like the perfect solution for it. So what we created originally was just a platform where anybody could basically crowdfund anything that could connect to the internet. So it could be Bitcoin ATMs, any room enabled with smart locks. And the big vision was like, you know, self-driving cars and big machinery and stuff like that. So it gave everybody the opportunity to easily get into it. But then on the other side of the equation, from more of like a philosophical and socioeconomic side, we didn't want all these machines to be owned by, you know, big corporations and large funds and really centralize that ownership. We just saw that as, you know, a bad way that the world was headed, where none of us have jobs anymore, and the robots are doing everything, and all the money is flowing from us to these corporations that own everything. So we created MyBit Go, which is our investment platform where anybody can invest in these machines and automatically get paid out right when somebody sends money to it. And then, you know, that's initially how we started MyBit, and then when Ether went up to $1,000, we expanded very quickly because we raised our first money when Ether was $7. So we got a little overexcited, and we started branching out into some governance solutions, worked a lot with DAOs, did a lot with Downy platforms and stuff like that. And we still actively develop on a lot of things like that, working with like Aragon and really pushing that vision of decentralization. We love blockchain, but our real goal is decentralizing everything, and we think blockchain is the perfect tool for that. So to get a little bit more into, you know, whenever that. So with MyBit Go, that's like the main thing I wanted to talk about tonight, because we do so many different things, it would just be too chaotic if we started talking about everything. But within MyBit Go, our real focus on it is being inclusive and fair to everybody with it. So we wanted to create roles for everybody regardless of their financial background. So We have investors who are actually the people like funding these assets and stuff. The IoT partners are the companies that create it, ship it, like the manufacturers. And then we have the asset manager role, which is really needed for the foreseeable future, at least the next 10 years. You know, in a perfect world, when a machine has an issue, it would trigger another machine to come and fix it, but we're nowhere near that stage yet. So we need a level of human involvement on that. And it also gives people who do not have the money to be an investor to participate and help manage it, and in return get a percentage of the fund's revenue. So it really creates this whole inclusive environment for everybody on it. And right now, where MyBit Go is, we've been pretty slow launching it. We've been working on it about the past 18 months, and we're bringing it mainnet in Q2 of this year, within the next month or two. And me and Martin were just talking throughout the afternoon about how we can use ProgressBar as one of the launch pads to start testing out some of the things, so we're really excited to work with them on that. And kind of like what the future looks like after that is we are spending the rest of 2019, you know, we spent 2017 really building the company, raising the money, stuff like that. 2018 was the year of actually building the products, and 2019 is when we ship them all to production and start getting people to use it. And our main goal after we release it in Q2 is spending the rest of the year to migrate the network into a network of DAOs. And what DAOs are, it stands for Decentralized Autonomous Organizations. And what that really means is it's a way to structure a company that's run fully on code. So you don't rely on somebody like me to run the company or specific developers or anything like that. Anybody with the community can vote, and that will trigger like where the company goes, how the money's distributed, and we really think that's the future with everything. So, like I said, we're working with Aragon right now because they're just the most advanced and usable. But that's really like what we're going to be focusing on through the rest of the year. And that is really it. One thing with DAOs is that it's really reliant on community contributions. So we're restructuring everything in our company where stuff doesn't rely on us and our core team anymore. And anybody, regardless if you're a developer or not, can contribute and help in the success of it. So we would encourage everybody to go to our website, mybit.io, and just look for different opportunities. And over the next few weeks, we'll be shipping a lot of products that we've been working on in stealth and releasing a new website and stuff like that. So we just encourage everybody to keep track of our project. Thank you.
Did you hear about the concept of continuous organizations?
Yeah, so I only really know the basics about it, but what we've kind of employed since, from like the DAO structure, I'm like pretty new to it, and our CTO knows a lot more about it, but from more of like a token economics model of it, we're kind of trying to incorporate that because we launched a token initially to bypass like venture capital and not give away equity. We didn't do it because our idea was too shitty to raise money through a VC. And we are now we are sitting on a ton of tokens, and what we're doing is more of like a continuous token sale, which we launched in January. And we have it structured where 50% of the funds are going to the DAO that we're creating, and 50% are going to the foundation just to oversee it. But as we fully test the DAO and it works, we'll migrate all the money to that. So we think that's kind of like a model now for how you get the rest of your token supply out there. In terms of how the other aspects of it, I don't know. I think it's really early on in the concept, but I think I really like the idea of it, and I think it creates more of a fluid environment on governing structures and stuff.